Most traders don't lose money because the market is hard. They lose because they keep making costly, predictable mistakes without even realizing it. And the worst part, the market punishes these mistakes ruthlessly, draining accounts before traders even know what hit them. Take Martin Schwartz, a futures Wall Street champion. He thought he had it all figured out until his first trade wiped out $10,000 in a matter of hours. Imagine watching your hard-earned money vanish in the blink of an eye. The lesson? Trading isn't about winning. It's about surviving long enough to get good. Most traders never even make it that far. Now, let's break down the 10 biggest trading mistakes and how to dodge them like a pro. Number 1. Lack of a clear trading plan. Would you build a house without a blueprint? Then why trade without a plan? A trader without a plan is like a ship without a compass. How do you expect to reach your destination if you don't even know where you're going? Before you enter the market, ask yourself, are you trading for income, career growth, or just the challenge? How much time can you realistically dedicate? Do you prefer frequent small profits or long-term gains? Are you educated enough, or do you need further learning? A solid trading plan includes a well-defined strategy, breakouts, trend following, scalping, etc. Risk management rules, entry and exit criteria, a way to track and refine performance. Without a structured plan, trading turns into gambling, and gamblers lose. So, what's it gonna be? Smart trader or reckless gambler? Number 2. Overtrading and taking on too much risk. Did you know 80% of traders blow up their accounts in the first year? A lot of traders think the more they trade, the more they'll make. Wrong. Overtrading is a one-way ticket to burnout and empty accounts. Why? Because greed makes you blind to risk. Overtrading wrecks accounts. Here's how it traps traders. Jumping into every setup without filtering quality trades. Taking massive positions. Risking majority of your capital on a single trade. Trading multiple markets at once. Spreading yourself too thin and making rookie mistakes. Here's how to fix it. Start small. Pick 1 or 2 markets, master them, then scale. Trading is about precision, not volume. Greed wrecks accounts. Discipline builds them. Number 3. Emotional trading and revenge trading. Ever taken a trade just to win back losses? That's revenge trading, and it's a killer. A winning streak makes traders overconfident. Losses trigger panic, and emotions make you do dumb things in the market. Emotional landmines that are blowing up your account. Revenge trading, trying to win back losses through impulsive trades. Fear and hesitation, entering too late or exiting too early. Overconfidence, going all in after a few wins. Before hitting that buy button, ask yourself, does this align with my strategy? Am I making this decision based on logic or emotion? How will I react if this trade goes against me? Successful traders don't let emotions dictate trades. The market doesn't care about your feelings. It only rewards discipline. Number 4. Guessing and chasing the market. If you're trading based on gut feelings, you're gambling, not trading. Too many traders treat the market like a casino, blindly jumping in without research. Would you bet your life savings on a coin flip? No? Then why trade without analysis? These costly mistakes wipe out traders fast. Guessing trades instead of using analysis. Chasing after big price moves instead of planning entries. Following the crowd without understanding why. Here's how to avoid them. Learn technical and fundamental analysis. Trade based on logic, not hype. Because in trading, fear of missing out is a guaranteed way to go broke. Number 5. Poor risk management. Your top priority in trading isn't making money, it's protecting money. But here's where traders mess up big time with risk management. No stop loss order. Trading without a stop loss is like driving without brakes. Using wide stops. A stop loss set too far away reduces profit potential. Over leveraging. High leverage magnifies both gains and losses. Many traders only focus on potential profits, ignoring risks. Here's how to fix it. Use stop-loss orders to protect capital. Keep leverage low until you fully understand its impact. Follow a risk-reward ratio. Never risk more than you can afford to lose. Risk management is what keeps traders in the game long-term. Number 6. Letting profitable trades turn into losses. Even experienced traders make this mistake, watching a winning trade turn into a loss because they didn't have an exit plan. Here's the solution. Trailing stops. Adjust stop-loss levels as the trade moves in your favor. Scaling out. Secure partial profits while letting the rest run. A planned exit is just as important as a planned entry. Number 7. Unrealistic expectations and searching for the perfect strategy. Thinking you'll get rich overnight? That's how most traders blow up. A lot of traders expect instant success, like they'll just wake up one day and be printing money. If only it were that easy. The false beliefs that ruin traders. Expecting instant success leads to impulsive decisions. Searching for the holy grail. No strategy works 100% of the time. Here's the hard truth. Instead of chasing perfection, focus on refining a proven strategy and improving execution. Success isn't magic. It's the result of consistency and discipline. Number 8. Not tracking trades. If you don't track your trades, how will you ever improve? Most traders fly blind. They don't review past trades, so they keep making the same mistakes. How can you level up if you don't even know what's holding you back? Here's how to turn it around. Keep a detailed trading journal. Spot patterns, refine strategies, and turn past mistakes into future profits. Number 9. Ignoring time horizons and investment goals. Are you a day trader, swing trader, or investor? Because mixing strategies is a recipe for disaster. Many traders jump between styles, scalping one day, swing trading the next, holding long-term investments. That's like playing 5 sports at once and expecting to win championships in all of them. Here's what to do instead. Define your time horizon. Pick a style that fits your personality and goals. Focus beats randomness every time. Number 10. The biggest mistake, giving up. Every successful trader has one thing in common. They didn't quit. Most traders give up after a few losses, never realizing setbacks are part of the process. Trading is a marathon, not a sprint. The mindset shift that separates winners from losers. Start with small capital while learning. Accept setbacks as part of the process. Focus on progress, not overnight success. Winston Churchill once said, "Success is going from failure to failure without losing enthusiasm." What you need to remember moving forward. Treat trading like a business. Trading is a skill. The question is, are you willing to master it? Take responsibility for your trades, control your emotions, and continuously improve. By avoiding these 10 mistakes, you'll increase your chances of long-term success. Be real. Have any of these mistakes drained your account? Drop a comment and let's learn from each other.
If you enjoyed this video and found the content valuable, please give it a thumbs up, share it with your friends, and don't forget to subscribe for more amazing updates. Your support helps us create more of what you love. Thank you for watching Stita Pragya, being steady and wise.